Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks, and let's bring in our next guest for our cash tag segment. That's going to be Megan Brantley, Vice President of Research at LikeFolio. Welcome back, Megan. You've been gone for a while.
I know. Thanks for having me back, guys. And on National French Fry Day, did you plan this, Tom, whenever you picked this topic?
I did not plan it. I think there's a national day for about 10, 20 different things a day. So just got lucky, I guess, on this. But we're talking McDonald's. Shares are down about 5% so far this year, hit an all-time high. I think a lot of people are using this stock as a proxy for maybe a hedge against inflation and a potential recession sometimes, or historically. These names have been that way. But what kind of data are you seeing? As more people are getting out, we're through the pandemic stage, more people are going out to restaurants. It doesn't seem like they go out to a McDonald's. Maybe they go out to, maybe casual sit-down places more. But are you seeing positive data? Because the stock's held up pretty well compared to the overall market.
Yeah, I think to lead off, you make a really good point. That's one thing that we check. We listen for these macro trends of people who are talking about, whether they're eating at home, whether they're going to a fast food restaurant, or they're going out to a restaurant. And we do see more significant year-over-year growth in people who are talking about going out to a restaurant. Those mentions are up by about 30% year-over-year, whereas whenever we look at those fast food mentions, those are only up by about 20% year-over-year. So there's a bit of a discrepancy there, but still, solid growth. However, whenever we look at McDonald's comprehensively, so these are mentions from consumers who are just talking about McDonald's, whether they're talking about a product, whether they're talking about going through the drive-thru, whatever means that they may be engaging with the company. And you can see a bit of a tempering in that year-over-year growth, that blue line. And so whenever we look at this, I think this is somewhat to be expected. Keep in mind that LikeFolio data, we're really listening for those English-speaking consumers, that U.S.-based customer base. And last quarter, McDonald's came out and said that U.S. same-store sales, I think, were up by about 3.5%, but this was mostly due to price increases. So I think that this is really important to take into consideration when you're looking at this, that, even though there is a slight tempering in the mentions of people who are potentially talking about maybe visiting a McDonald's, that doesn't necessarily mean that that average ticket price isn't higher. I think overall, the average menu price at McDonald's is up by about 8% year over year. So this is a company that's definitely passing along some of those costs to consumers. And so when we look at this, one area that we like to look at whenever we're considering price increases and things like this is our sentiment data. And from a sentiment perspective, when we look at, the overall fast food landscape, we see McDonald's keeping in line with just about every other peer. They're right around 64% positive, and that's pretty unchanged year over year. So I think it is significant that it does show us that McDonald's is, starting to pass this along, is able to pass this price increase along to consumers. But what's a little bit concerning is that you see that McDonald's growth is not faring as well as other competitors, specifically names like Yum. This is mostly driven by its Taco Bell brand within the U.S. And so, a bit of a mixed bag here whenever we look at McDonald's, just because we do see some tempering in that growth, that overall buzz for the brand, but we see sentiment levels remain pretty stable.
Megan, when I look at, I really like the purchase intent versus sentiment plot that you guys have, but with all the competition in fast food, like Chick-fil-A, like Panera, like Subway, like Domino's, like Chipotle, you can even throw Starbucks in there in a way, your purchase versus sentiment could really look like a Jackson Pollock picture, right? You could have 10 more names on there, and they would be an interesting measurement. But if we're thinking about a recession, because the one thing, if I look at all these names that I have written on my paper and seen on your board, the one thing you can't argue with is the price point. And the price point for McDonald's is the cheapest of all these. So if we're connecting dots in the U.S. economy right now to a recession, doesn't that favor a stock like McDonald's? At the end of the day, much like Walmart, much like Costco, this is the cheapest food that you can buy in terms of fast food, Megan, right?
Yeah, no, you're exactly right. I think that, that value proposition is one thing that's really insulated McDonald's sentiment, because a lot of times too, one thing we didn't point out on that chart is the size of those dots. And you can see that more people are talking about engaging with McDonald's than any other name on that scatter plot. So the fact that McDonald's, with this massive customer experience realm is right in line with other much smaller names. I think that's very significant, and that does, speak to that pricing power that McDonald's has. Another element that when we look at McDonald's that they do really well is their app and their loyalty program. I think this is an area, on National French Fry Day, I don't know if you guys know this, but if you order through their app, they're giving away free French fries. And this is really strategic because they want to pull consumers into, their ecosystem so that they can push alerts and get consumers hooked and ultimately provide more of that value prop. I don't know if you guys have used their app before, but, whenever you log on, they have a lot of deals for consumers. And right now we are seeing consumers who are talking about seeking out deals. Consumers want to feel like they're getting that value. And so that could be a silver lining in McDonald's, at least in our data perspective, because we see those app usage dimensions up by about 11% quarter over quarter, which is a nice sign for the company moving forward.
Yeah, Megan, I mentioned earlier that, the stock's held up pretty well compared to the overall market. I think maybe, with that it pays a dividend historically. If you look at this, moving forward, do you see any drawdown in sentiment as far as earnings goes, or maybe the outlook for McDonald's, or getting rid of some of their promotional items? I know that, but this is all about scale for this company. And if we do go into a recession, to Kevin's point, I mean, this is the lowest price point, and maybe they do well in this type of environment. But what kind of data forward-looking do you have?
So this chart I think is really important because, we talk about LikeFolio's earnings score a lot, and basically our earnings score is gauging, how we expect this performance to be, positive 100 being much more bullish, negative 100 being much more bearish. And McDonald's is coming in at a negative 20 for us right now, and that's right on the dot. That's right on our neutral line. But whenever you look at this progression of how this earnings signal has kind of changed over time, you can see that the company is losing a bit of momentum. So, you don't like to see this negative slope whenever you look at this change over time. For us, looks like McDonald's was doing really well through about May, and then things started to slip off a bit. And you can see that in that mention volume. And what this score is trying to understand, how we measure this is, how is the company performing based on how we would expect it to be performing at this point versus last year. And whenever we see this, we see that, Q2 a year ago, we had actually a nice little seasonal bump. We had mentions that were up by about 3% year over year. And now we're starting to see a little bit of a seasonal lag. In the same quarter that they're reporting this year, we have those same mentions down by about 4 points quarter over quarter. So this isn't a massive split, but that's the cause, and that's why our earnings signal leads a little bit more bearish, definitely on that neutral line. So I think for us, we're cautious with this name just because we do see a little bit of tempering in just the enthusiasm from consumers. But one thing that we can't gauge is, those price increases and how well McDonald's is doing at growing that average ticket size. And so, the other side of that ticket is that, we do see some strong data coming out of just those app mentions specifically. So I'm curious of what you guys are keying into heading into this report.
Yeah, I think that's going to be key. Is this recession-proof? Is it a safety play? And that's, I think, one of the things we have to figure out with McDonald's. All right, great stuff as always, Megan. Appreciate it. Have a great day.
Thanks, guys. You too.
All right, that's Megan Brantley, Vice President of Research at LikeFolio, joining us, breaking down the data points here for McDonald's.